But some of the media companies have been turning in reasonably good numbers. Girish Agarwaal of DB Corp is up next. Girish, good morning. 13% jump in ad revenues. Was it just volumes, or did you increase rates as well this quarter or the quarter gone by?
Fortunately, the entire growth has come because of the yield improvement. There has been no volume growth at all. I think that's good for a business going forward, because generally when the market is down, we all tend to offer more benefits to the market with the hope that the volumes should improve. But this time we took a call that we are not going to go down on rates. In fact, we'll improve the yields. And as a result, the volume has been flattish, but there's been a decent growth in terms of the overall top line.
We were just talking to HT Media the other day, and they were saying that they could see the first signs of the market turning around and having bottomed out. Are you seeing the same signs in the markets that you are in?
Yeah, I do agree with that, because if you see the last quarter, the Q4 has gone up pretty good, 13% growth. And also the April and May month, what I'm seeing, the growth looks like almost on the same lines. I think reason for that is, in our market especially, the government spending has increased, and that is kind of increasing the consumption in the market furthermore. So that way I see the growth in practically all the categories like automobile, government spending, FMCG, education and all. So overall things looks like that they have kind of bottomed out already.
Girish, good morning. Is it looking consistent enough for you to extrapolate what could be reasonable ad revenue growth for FY14 or even the first half of it though?
That's pretty... I really can't say that, because last 2 quarters, fine, things are looking better. But I really can I say that next 12 months going to be like that? I hope so.
What about margins then? Would you say you're feeling confident about holding margins at the recovery you've been able to do this quarter all the way up to 23%?
Very much. Margin-wise, we are more comfortable, because if you look at my mature additions margin, we are at now at 31%. And my losses on the emerging additions, which were last year 78 crores, have come down to almost 34-35 crores this year. So there has been a major improvement on that. Also on my cost front, we've been able to control the cost pretty well. If you look at the Q3 and Q4 cost, we have been actually taken a dip on the cost. So overall, things are looking, from the margin point of view, looking in control.
So what's your outlook? I mean, looking at all your businesses for FY14 now, on what you delivered on FY13, which was by your standards a bit of a sluggish kind of year.
True. So from that, I think the numbers should improve, because overall, if you look at the ad growth, the annualized number is around 6-7%, but the Q4 is 13%. So I assume that the Q1 and the going forward, if that double-digit number continues, then I think the margin can further go up. Like, for example, my console margin today on the EBITDA is around 25%. This, I think, should move up towards almost, touching whatever I'm earning in the mature editions of mine.
Good luck, Girish. Thanks very much for joining in. That's DB Corp. Good set of numbers for the fourth quarter. The stock is quite flat, though, at 242. Up next is TTK.